In this video, I'm going to talk about 5 common mistakes we see people make in their tax returns. Now, to be completely honest with you, if you want peace of mind that your tax return is 100% correct, use an accountant to do it for you. We have limited space available for 2021 tax returns, the ones that are due in by the end of January. If you'd like to have a chat and see how we can help, then please get in touch. Number 1, not thinking a tax return is even needed. We see this all the time. I've hardly earned anything from my side business. It's more of a hobby. That's not necessarily true. If you've earned more than £1,000 from your side business before expenses, then you have to report it on a tax return. We also hear, I've made a loss on my rental property, so I don't need to declare it. Not always the case. This may be true, but if your rental income is more than £10,000, then regardless if you've made a loss or not, you must do a tax return. Also, if HMRC ask you to do a tax return because you have a rental property, then you have to do one, whether you've got any tax to pay or not. Number 2, claiming the full cost of your mortgage payment against your rental income. It is the interest only that is allowable against your rental profits. So if your mortgage is on a repayment basis, then you need to work out the amount of interest that makes up that mortgage payment and only claim that on your tax return. Number 3, claiming the costs of training. The costs that you incur at the start, if you're a sole trader, to enable you to be able to do your trade, they are not allowable for tax.
You what?
The reason for this is they are a capital expense, they are not a revenue deduction. And for that reason, you can have no tax relief. For example, if you pay to become a qualified electrician for all of the courses and then start a sole trade business as an electrician, you can't claim the costs of those electrician courses. Continuing professional development, or CPD, is absolutely fine. So if you're taking update courses, refresher courses, or anything like that, absolutely you can claim that on your tax return. Number 4, forgetting to register for VAT. Now we often see people adding up their turnover for the tax year and then saying, well, I don't need to register for VAT because I only did £80,000 in the last tax year. It is a rolling 12-month period that you must look at for VAT turnover. At the end of every single month, look back 12 months, add up your turnover and see what it is. If it's over £85,000, you must register for VAT. Your registration date for VAT will be the first of the following month. For example, if you add up your turnover between January and December and it's £87,000, then you must register for VAT and your registration date will be the 1st of February the following year. And finally, number 5, private use adjustment. Often people forget to adjust their expenses for the private use element. For example, motor costs. There are some costs that you cannot claim at all where there is personal and business use. For example, a personal phone contract. You can't just add up your phone bills for the entire year and take, say, 50% of it because you've used your phone half the time for business. Unless you can identify business calls separately over and above your monthly contract price, then you cannot claim anything at all for that phone bill. As mentioned at the beginning, if you need any help at all with your tax return, then just get in touch.